Hey TSW Forex, welcome back to another episode. This is the 5th chapter and we're moving very fast. We're posting a video every single day. We post at 6:30 in the morning and we're going to do this until the course is finished. Of course, this is TSW Forex free course, phase 1 and chapter 5. Let's get straight into it. Okay, so in chapter 5 we're going to discuss two things: the types of analysis and the types of charts. Types of analysis. So there are three main types of analysis in Forex. The three main types of analysis are fundamental analysis, sentimental analysis, and technical analysis. So we're going to go straight into the fundamental analysis. Now, currency will react to a lot of factors. These factors include macroeconomic events, central bank monetary policy shifts, and political and social news from the currency's nations of origin when compared to other country or the other currency in a currency pair. Alright, so fundamental analysis continues. Some of the economic fundamentals include inflation rates, interest rates, political issues, unemployment rates, and gross domestic product or GDP. The release of these reports is often categorized as follows, and then we have three categories that the news will come into. So whenever there's a news release as it relates to the country's economy, you will have as expected. So the release statement was according to the expectations, and usually that is good for the currency or neutral for the currency. If the news comes better than the expectation or better than expected, the release statement was better than the expectations, is good for the currency, which means you'll find that the currency gains strength for that specific news release. And if it's worse than expected, then the release statement was worse than the expectation and it's bad for currency. So fundamental analysis continued. We have fundamental analysis requires news and events. These schedules can be seen on a lot of websites, but the most popular website used is forexfactory.com, and I will definitely suggest you guys getting used to this website. It's the best one, and you can create an account specified to your time zone. So whatever time you see the news will release, it's linked to your time zone, and you can also select the type of news that you want to see: high impact, low impact, or you want to see when the banks are having holidays, etc. So currency pairs tend to react sharply to release of economic data on current geopolitical and local news events, especially when the results differed significantly from what was originally expected by a consensus of market participants. Based on how these news is received, it usually leads to increased volatility in the market as traders swiftly open and close position. And of course, as I said before, if you swiftly open and close position, if there's a lot of orders being filled in the market, that's increasing the volume or the amount of volatility that is happening in the market, and therefore it will cause the price to move very rapidly. So you'll find a lot of when you're on the charts, sometimes when news are released, especially the high impact news, there's a lot of movement in the price. Next analysis that we have is sentimental analysis. So this type of analysis that is hardly spoken about. However, all information is valuable, and this is why we created the course. Sentimental analysis is, in short, a psychological and emotional analysis of the traders in the market. So it's basically analyzing how the traders in the market feel. This one is less logical, it's more emotional, as you say. It involves analyzing the predominant feeling or attitude the traders have about the market. With sentimental analysis, you can assess what most traders are thinking about the currency pair and use the information to make trade decisions. Retail traders don't have the money required to move the market in the direction that they want. So a common technique used involves entering trades that are against the current market feeling. And of course, we said the bulk of volume that the banks and the financial institutions use to move price. Retail traders have to do the same thing at the same time, and we don't do that, right? Because we're not communicating. So we work off the emotions. So if a lot of traders feel like they want to move the market up, or they think the market is going to move up, it's normally advised from a sentimental analysis perspective to short the market instead of going long with them, because normally the banks do the opposite of what the traders do. Their aim is to make money Your money is what moves the market. When they hit your stop loss, that is what moves the market. So we normally advise, when it comes to sentimental analysis, to do the opposite of the retail traders. Technical analysis. Technical analysis is the study of the movement of price or price action using historic price data, indicators, trend lines, patterns, etc. to predict future movements. Technical analysis is an on-chart examination of the respective currency pair in an effort to find price patterns that can provide clues into future price movement. This type of analysis is the most common type of analysis, alright? Followers of technical analysis rely on different systems and concepts to assist them in understanding the historic market happenings and identifying trading opportunities. So of course, we have this thing in technical analysis that we call always look left, because the movement of the price is always up and down and moving to the right. So you look left to see what price major key levels in the market, and we use that for an assumption for the future, to say, all right, at this key level or this price level, I'm expecting some form of reaction. And of course, we'll discuss this more when it comes to Japanese candlesticks. Some of the techniques and tools used for carrying out technical analysis includes candlesticks, chart patterns, support and resistance levels, trend lines, indicators such as moving average and Fibonacci. These will be discussed further in the course, and of course, I hope that you guys look forward to learning as much as possible, because the theoretical section is the phase one. So when we jump into the practical, which is what you do to make money, this is what you guys should look forward to. But of course, we got to get the foundation set. And the types of charts, there are many types of charts to which data can be represented. Some of these charts are line chart, area charts, bar charts, Kagi chart, point and figure, range chart, Renko, baseline, and Japanese candlesticks. As one can see above, there are a lot of ways that data can be represented. However, the top three are line chart, bar chart, and then Japanese candlesticks. Line chart. The main characteristics of a line chart, or how it functions, is that it utilizes the closing price only. Therefore, the graph chart is the graph chart is drawn at each point that the price closed in a specific time frame. And we will discuss this when we touch on the charts, guys. And this is an example of the line chart. As we know, price fluctuates. This is a daily time frame as well. When we go on the trading platform, we're gonna do that in detail at the end of the course. And this is the trading platform. So you have the daily time frame. So when you're on the chart, the whole day, if the price goes down here, the line will move. If it goes up, the line will move as well. However, it's the point at which it closes that daily point is completed. And then whenever the chart continues again, the next day, wherever that price go during the day, the line is going to follow. But it's where the daily candle close, or the daily price close, that is where you're going to find the line point being made. The bar chart. Take into consideration that there are four main things that constitute a bar chart, and these four things are opening price, and it has the low that the price went in that specific time frame, the high that the price went in that specific time frame, and where the price closes. And this is an example of the bar chart, and we're going to go into details of these when we jump onto the candlesticks in the next chapter. So look forward for that. We're getting more intense and more rapid as it gets to the more intricate spots and the intricate stuff that we need to learn. So we're going to compare all forms of charts when we get into that chapter, and hope that you guys are drawing, because we're going to need to do a lot of drawing in chapter 6. You need to draw, learn the candlesticks, study them, understand how they function. So this is what a typical bar chart may look like. We're going to go look into detail in chapter 6, as said before. And then we have Japanese candlesticks, and this is the most popular form that you might find most traders on Instagram or social media or anywhere at all. You will see them using this. So the Japanese candlestick, this is a typical Japanese candlestick chart, and this is the most popular form of technical analysis used, as it gives a lot more data, and we're going to discuss that in chapter 6. So thank you for watching, and this is the end of chapter 5. We discussed the types of charts and types of analysis. Looking forward to see you guys in the next episode. Have a wonderful day.